And here we have a benchmark of Intel versus AMD. And here we see a major size discrepancy between the companies. It seems unfair to compare them. In revenues, Intel is 11 times bigger than AMD. In net income, is 62 times bigger. In assets, 28 times bigger. Equity, 59 times bigger. So how can we compare something so massively different from one to the other? The answer? By using common size. If we did the same calculation for Intel and now do it for AMD, we would then see this result. And it's much cleaner to compare. They're all at 100%. Doesn't matter, one's bigger than the other. Well, now we see the difference in the percentage relationships. That there's a big profit difference for Intel versus AMD, 61% versus 37%. There's a big operating income difference between Intel and AMD, 32 versus 7. There is also, as you would imagine, most importantly, a big difference in net income or net profit margin, 29% versus 5%. So here, even though the size of the companies are so dramatically different, if you common size them, you can put them side by side. So if we look at the balance sheet, we'll see a very dramatic difference as well. I won't do the math for AMD. It's exactly the same things we did for Intel, dividing each line item by total assets for AMD. But looking at the results, the current assets are 22% for Intel and 77% for AMD. So they have a lot more of their assets tied up in their receivables and inventory than does Intel. And the reason is that the amount of assets in property, plant, equipment is far higher in Intel than from AMD. So they've taken an entirely different in their manufacturing approach for AMD versus Intel. So the investment profile looks completely different. Both have fairly active amounts of items in acquisitions leading to goodwill, but the biggest difference is their investment in PP&E. On the capital side, again, very low liabilities for Intel compared to AMD, much higher, 43% for current and total liabilities of 72% versus 13% for Intel and 41% for Intel. So in all different categories of liabilities, AMD has a lot more liabilities than does Intel, and that means that the equity is what's taking the difference. Where equity in Intel is quite substantial at 58%, for AMD is 27%. It doesn't mean that they're in financial trouble. It just means that Intel is run much more conservatively and it has a much more staying power or resistance from bankruptcy or downstrokes than does AMD. So summarizing our financial analysis, we reviewed the basic financial statements, the balance sheet, income statement, cash flow, and shareholders' equity. Lesson 1 was on gaining an overview of the business and gathering some basic information on the financial statements and taking that first shot at looking at balance sheet, income statement, cash flow, and equity. Lesson 2 was ratio analysis, where we did a series of calculations to be able to analyze different dimensions of how profitable and how healthy Intel is. Third is trends and graphing, how some reshuffling of information so we could see it in a different way actually helps our brains process a trend or anomalies that may be occurring. And lesson 4 is common size, where we use percentage relationships to then compare a company's performance over time, or separately, compare a company's performance versus a benchmark, such as a competitor, or it could also be used for industry numbers. So there was a quick dive into financial analysis, where we started with statements, did 3 different kinds of analysis to gain different types of insights about a business. We can then apply these to any company, and we'll do this in our workshop as well. All right, see you soon.